G'day traders, we're going to wrap up of Monday the 16th of July. So a couple of things here I want to show before we get in the charts, and that's first of all the daily chart and then bring over a 15-minute chart. 15-minute chart, just as a bit of a background into it, is something that I use as more of a medium-term view. So obviously the 1 minute and then 5-minute charts are very short term. You get them, or you look at them for your specific entry, and of course because of the short time frame you can have a look at the exact price or the exact location of the indicator, however you approach your system you can get a real detailed entry, and that's what you're looking for. The daily chart provides a bit of an overall direction as far as what sort of side you want to place a little bit more weight to. I suggest in your trading plans too you also describe exactly how you use the dailies. Are there certain times when you're going to completely just stick to one side and not look at the other side of the market? For myself, as an example, 9 times out of 10 I'm prepared to go both ways, but I place a little bit more of a weight on a certain side. So for example, now we're in a buyer's market, I place more of a weight on a buyer's side. I don't reject it, or don't not look at the sell side. I'm just allowing, I've got certain rules that are very black and white, but I can be a little bit more lenient on them on the buy side as opposed to sell side, and that's how I approach it. And then there's certain one-directional days where maybe I'll just stick to one side, but they're rare. But what I'm saying with this is have it planned or have it described how you use your daily chart in your trading plan. Okay, so obviously the daily chart, that's for longer term direction. We've got the short term charts, and then something in between. What I was talking about was this 15-minute chart, and I think it's a great medium term market. Gives a little bit of a direction idea of the sort of the immediate direction. Based on that. So obviously on the daily charts, we can be in certain sections. For example, we're in an up market all through here, but there's sections when there was really quite some strong downwards movements, and the 15-minute charts showed that we're clearly pushing down, and the downside was strong even though we're in an upward market. So the 15 minutes, that kind of link between the very short-term charts and the long-term charts, to give a little bit more of a confidence with the current direction. And I think it's also a good tool to use for potentially going for more. Most trades I suggest stick to your guns and go for a certain profit, but there's potential on some areas to go for more where there's a certain level what the market's looking to get towards, and you'll know by using a medium-term market. This is how I go for more, is when a certain level is presenting itself on the medium-term markets, so as in a 15-minute chart. So just to describe this daily, we've been breaking down and bouncing off this level here. We've now pushed up here and looking to get a bounce off this level here. Now this level here, remember this 1345, this is significant as far as looking on the 15-minute chart. So as we open up the market, we're sitting above this particular level here. But if you bring over the 15-minute chart just to show you, so here's this key level on the daily chart, this 1343, 1344 area. Here's the open of today. So this particular section here is the open. This is the pre-market that's since proceeded. But here's the opening of Monday. So you can see, we're definitely in an upward market, but there was a real opportunity for this market to come down and sort of test this area and get some support and buy there. So what buyers are always looking to do, if you think of buyers and sellers, they're always looking to find better places to get into the market. So we're certainly not in a seller's market. As we're coming down here, it could be fooled in thinking we're a seller's market, but we're certainly just coming down just to find a better area to buy from. And if you squash it up a little bit too, you'll see there's quite a decent trend line here for me as well. There. We hadn't actually confirmed yet, so this third touch is the confirmation. Now in the pre-market we've touched again, bounced off it, so this is a really strong trend line, so really looking to follow this, and once we start breaking underneath it, then we might get some pressure to the downside. But until then, this trend is really sustained, and we've touched it many times now. But it became quite clear at the opening that this is potentially an area, here it is here, that we could come down and have a look at. This is the 15-minute chart, so come down and have a look at it, and then once we bounce off that, then look at buyers up through here. Alright, so as far as these charts are concerned, here we are here. So we're pushing down. Thought there was a really good chance of, like I said, coming down to that level there. It's worth finding significant areas, or what I call key levels in the market. All you need to do to find key levels in the market, whether they're support and resistance, so that's your horizontal lines, or whether you want vertical lines or slanted lines, and that's trends. Okay, so for example, there's a bit of a trend 1, 2, 3, and we kind of broke underneath it here, but there was a trend forming up through here, so that's a key level in the market, so you can draw these sort of things in. Okay, so there it is there. we kind of sustained it, bounced up, then we eventually break down underneath it, so we're going to get some little bit of pressure to the downside there. Other key areas that I like to have before the start of the market, really base all my trading areas around it, is just by basically squashing up the market. And this is best done on a 15-minute chart or slightly longer term chart, but just finding areas where the market keeps on testing. So you can see here 1347, it's an area that keeps on being tested. And what makes a really strong key level is if it's tested from above and below. Say for example we pushed down here, bounced down, bounced off it, got above it, bounced up off it. So if it bounces both ways, that makes it a really sustained level. So I might even draw in a few key levels here for myself. 47. We talk about these levels in the trading room, and then it's just a matter of scrolling back through the markets, and there's no right or wrong areas as far as what you're looking for. You just want to have these in the market, and you'll notice that the market reacts to it. So for example, going over to the 1 minute chart, here's this 47 here. You can see we just hung around this area. You see how many times the market hit its head on it. So that's just really confirming that it is an area in the market. So what we're looking for is the market come down, pop back up, hold there, and then push lower and get some sort of sell trade, which didn't quite. So that's the sort of setup that you're looking for to start off with. We then came down, bounced off the support here. We started pushing up higher, looking for some sort of 5-minute fade trade here potentially to come back. And if you're getting the fade, so you can see the market was crossing down. What was going to happen is this fade was looking to set up right on this level here. So this is becoming quite significant at this 13.7. It's support. Now we're getting above it. Sorry, it's going to act as, it was resistance. But now we've got above it, it's going to act as support and look to push the market back up. From there we pushed up higher. The market got back down underneath it. See here there's a bit of a 5-minute buy setting up, so the predictive average is starting to cross up here. So if this started pushing up, what we'll look to do is buy off 1350 and get a continuation. But at the end of the day, the market stayed underneath it. Had a little bit of a look above there, but nothing really sustained there. From there we pushed down lower. Now this is an interesting spot. This is ideally a 5-minute fade, so you can see we push down here, moving averages pointing down, the predictive is crossing back up for a second, and this is where you possibly look to sell and get a continuation. However, this is kind of where you got to really decide, do you look at purely at the indicators or do you look at price action? I mean, nothing's right or wrong in regards to both these areas, but you just want to be very clear on how you approach it. For me, until this market really kind of gone underneath and sustained itself underneath this 47, I didn't believe the markets were selling. I see this 47 as a good area for the market to come back, hold, and then push higher again, because remember on the 15-minute charts, the daily charts were certainly on the upside. So there's nothing indicating that we're going to go up, that we're going to continue and go down from here. If anything, I was looking for it pop up, come back, bounce off this level, and then get a continuation. So buy somewhere around here. So I'm not saying this particular fade to the downside either. So this particular fade didn't work. You can see it would have got stopped out, so it's a sell. Not saying it's a bad one, but you just need to determine how you approach the market. Okay, I know many traders that will look to sell here, and then some will look to approach it other ways. I'm just not quite at that area there. I was more looking at whether it wanted to hold and go higher. But it's up to the individual, and there's no right or wrong answer. Just become very clear on what you're looking for. From there we pushed up higher. We got above this support level, resistance level, and now what's happening is we've come back underneath it, and we kind of really sustained it here by getting a good decent 5 ticks underneath it. So we're coming back up to it here. So also we get this 5-minute buy here. So again, we're getting some pressure underneath it here. While we're sticking underneath it, not particularly interested in buying, not prepared to sell. I'm not going to say go ahead and say this is a great selling spot. But what I need to see is it to get above and sort of sustain this level and maybe even come back to 1350. So again, based on the actual indicator, yes, that was a 5-minute buy. But if you're looking at price action, there's just you can see there's a whole heap of markets sitting underneath that key level, which we kept on hitting all day long. Okay, so hopefully that makes sense, and you can see there it has eventually pushed down lower. Righto, just to go through the 1-minute charts. So here's this bit of a push down here. We're looking for the markets come down. There's real potential. There's direction for it to come down a bit, at least 3-4 points. So looking for it to come down, pop back up, and get some sort of sell on the downside here. From here we're bouncing off key levels on the longer term charts, then we started pushing up. Okay, so we really confirmed the upside here, and then we're looking for it to come back and get some sort of hold and get a continuation of the upside. This sort of going back and looking at power fades and things like that. This one here is not a bad way to approach it. Obviously, it's an early one. It's the first power fade of the new direction, and at certain times, if you've got an understanding of the longer term markets, and all of a sudden you get some real what we call thrust off some support areas, and the overall markets are on the upside. Something like this an early one, is fine. It's okay to take it. I wouldn't call this aggressive because it's just going with the absolute flow of the market. Okay, so something like that there is not too bad. Any sort of bounce around here, so some sort of power point around here didn't quite get there. Need another couple of ticks, would be an ideal situation there. We've come up, made these higher highs. Then from here, it's trying to establish whether it wants to go higher again or go lower. So, sort of this 1350 is the level. So it started getting underneath it, popped up here, and then that's where it's pushed down from. Okay, so all of a sudden the support becomes a resistance. So we're looking for it to hold. Doesn't hold, gets underneath it, then comes up, hits its head on it, and pushes it down. So support can become resistance, and vice versa. From there we push down lower. It's through here. This is where we started to get sort of the support and expect the markets to go back to its highs. And then from there you can see it's stepping up. It's making higher highs and higher lows, and starting to get some momentum back to the upside here. And looking at trying to go back up and have a look at its highs. And then this is the area where we started to get back towards the highs, and then get a little bit of a pullback and seeing what the market wants to do in regards to these key levels, so 1350. So you can see it's a bit of a mess around here. It doesn't know really what it wants to do, and as it was coming up, this is where the 5-minute buy came up right here. So you can see it's not convincing on the upside or the downside. Certainly believe there's a little bit more pressure on the downside here, just because it had its opportunity to go here, and it should have held and gone higher here. Then it hasn't done that. It's just gone dealt sideways. Obviously, there's a bit of a change in the in what the buyers and sellers are thinking, and all of a sudden the sellers are starting to gain a little bit of control, and from there they'll push down lower. So hopefully, quite a bit of detail there. Hopefully, get a bit out of that and understand why it's important to, I guess, understand key levels in the market, or understand where we sit in regards to longer term and medium term markets, and understand clearly in your own mind how you want to approach the market. Okay, there's nothing wrong with using some solid indicators. Just I think they work best if you incorporate them with some basic price action, trend lines, support and resistance lines. And at the end of the day, that's the absolute fundamentals of trading. One of the first things you learn is how to read support and resistance. Okay, and support and resistance are just horizontal lines of support and resistance, and then of course you've got the vertical lines, which is trend lines. Okay, and there's heaps of information about that, so if you ever want to learn more about it and understand a little bit more about it, of course the trading room has it in there, and there's Google and things like that where you can look up more information about it as well. Right, so that's a wrap up for Monday, and we'll speak to you guys Tuesday.